Hey traders, Raghee here. Happy Friday. Welcome to Charts and Coffee for May, what is it, 7th? May 7th, non-farm payroll Friday. And we're going to take a quick peek at what we've got going on with non-farm payroll. And so again, we've got the end of the week. We've got non-farm payroll. Scroll down here to the bottom of the calendar. We have tech still, misbehaving a bit. Although really interesting, we saw the Dow heading lower with non-farm payroll, and we saw NAS heading higher. Very interesting action. We'll take a look at that here. There's our jobs numbers. Let's jump into what that potentially means for us. Here's the thing, gang. Individual data points, even ones as impactful as non-farm, don't necessarily change trends. They're volatility events, right? So I'm not really going to be changing my opinion of what I'm expecting because of non-farm, right? Not in any way. I believe trends are still generally going to be intact. And so don't get too swept up in these data points. Even earnings, gang, they're not going to change the trajectory of trends. They're going to add a lot of volatility. So let's go take a look at where our S&P is right now. Heading higher before the bell. NASDAQ heading higher. One thing that we did in the Sector Secrets Mastery is rather than play the cues, which throughout the week I've been recommending not to do. We've been playing the XLC. We've been looking at communications because the heavily weighted stocks in communications have been your relative outperformers. And so Facebook, Alphabet, that's been where the action's at. So we look at the comparison of, say, the XLKs of the world to the XLC, and you'll notice this is where your relative performance, this is where your double green is at. All right, so that's what we've got going on as we are kicking off this Friday. Good morning, good morning. Let's see, Line Watcher asks, given the big disappointment in the recent jobs report number, does a narrative for the reflation trade change? Oh gosh, no. And I'll tell you why in a moment. Terrific question. So remember that good news is bad news in an accommodative environment. What does that mean? If the Federal Reserve feels that they need to support the economy with accommodative monetary policy and money printing, the more the economy heats up, the more signs that there are of overall health, the more that there's less reason to be so accommodative and have the type of monetary policy that we're exercising. And that is something that stocks would hate. So bad news is sort of good news in this environment. Bad news meaning the economy is not doing that well. The jobs numbers are not that good. And remember, when it comes to the Federal Reserve, the U.S. central bank is one of the only G7 central bank with a dual mandate, meaning they're not only watching the inflation target, but they're also looking at jobs. Janet Yellen, during her tenure, however, kind of put a floor on what the central bank was expecting. And I think she basically said, as long as they're printing about 100,000 jobs per month, they're not going to sweat it. If it's a whole lot above, they're not going to worry about it. As long as it's not a whole lot below consistently, they see 100,000 print, they're pretty much okay. Now, granted, that was before the pandemic, but I still think overall, bad news is good news in this environment. That's the way I look at that. So thanks for the question. Travis, how are you? Do I feel that this will be a good dip buying opportunity in the XLF? So right now, I can't say that we have a significant dip. It doesn't mean that it's not a dip. So we're at about 37. The closest that I will consider at this point an entry would be the 13 exponential moving average, which is sitting a good almost 90 cents lower than we are right now. So what is a dip? And I love that you're asking about dip buying. in a double green market. So kudos. Double green markets are trends, dips are retracements or pullbacks. So you can look at the last major move and look at, say, 38.2% shallow retracement. You can look at a more active EMA in a parabolic market, which the XLF is, and look at a 13, maybe even an 8. But 13 to 21, that zone is typically my preference for a shallow retracement. So it's not enough yet, but it's definitely heading in the right direction. But yeah, we can see a little bit of a dip here. And you know, we have that long position we built. Thank you, Janet Yellen, in Bank of America. Hit some targets already. Little pullback. It too is not enough for me to re-enter. I probably couldn't think about that until about 40 to about 40 even. So yeah, for me, what is a measured retracement? How much do we have to move, and how do I move it? Measure it. How do I measure it? Fibonacci levels, VWAPs, 13, 21 exponential moving averages. So I think we're seeing some moves lower, but is it enough? And right now, I'm not crazy about it being quite enough yet. All right, next up is, do I have a longer term target for the upside in gold? Hey there, FOMO. All right, so good to see you. So gold, yes, we've been bullish on gold, but only after the 1, 2, 3 completed in the ZB. So the 1, 2, 3 had to complete here. Now I will say ZB was looking a whole lot better until before non-farm payroll, but once the ZB completed the 1, 2, 3, at that point, what we have is the real yield conversation dropping, and that just kicks the door open for gold. So gold's been waiting for really a more significant breach of the 158 level on the 30-year. And once we got that, it sort of unleashed gold. So the timing that we've been talking about has been spot on. We finally got that timing down. So I think anything before now meaning this week, even the end of last week, before that window would have been premature because bonds really just didn't kick the door open. And now that they have, gold, and by the way, silver will continue to head higher too. Now, the question is, let's open this chart up. The question is, what would be a target to the upside? So what I can do is I can re-anchor my VWAP, my volume weighted average price, to, you know what, let's do this. Let's anchor that volume weighted average price. Well, I'll have to change that. So what I want to do is re-anchor my VWAP and re-anchor my V score and find out what would be sort of extended. According to the current anchor that I have, which is the first of the year, I'd be really aware of, say, 1850 to 1854. 1850 is a major psychological level. 1850 is the first standard deviation of the V score. So the standard deviation of volume weighted average price. So that's what I'd look at to the upside, my friend. Yeah, great question. Thanks so much. All right, next up, question-wise, is FSLY. Hey there, Davis. Do I like FSLY where it sits right now? I can't say that I do. So look at the structure. And anytime we have a stock or an ETF that is not moving with the broader averages, we have to stop. You know, think of it this way, and this applies to my day trading too. One of the things that I love to do as a swing trader end of day and a day trader, short-term intraday timeframes, is start with the indices, then go to the sector, then go to the stock. So index, sector, stock. Once you get a read for the indices, you can then go find out where the outperforming parts of that index are at the sector level. Once you've got that, you can do it again at the stock level. So index, sector, stock. What that does is it makes sure that you're moving with the broader averages. You're moving with the wider held psychology. You're moving with the overall tide. So I bring all that up with FSLY and any kind of double red or underperformer, which, you know, FSLY is completely doing its own thing. It's not moving with the broader averages, which are moving higher. And So it's got a different narrative, and it's not being influenced by the broader market. And that broader market influence is such an advantage for us as both swing and day traders. One of the things I do as a day trader is once I get a read on the S&P, now I've opened up possibly XLF, XLK, and XLV. I've opened up the stocks that could be relative outperformers. What I remember is even as an index futures trader, I'm trading stocks. So why not just embrace that and then find out where most of the flow is heading? And so when we look at flow in FSLY, I'm sure there may be some kind of setup someone's looking at here, but it's going to be akin to bottom picking. And I would rather find things that are moving with the broader averages. Hope that makes sense. And thank you for the question. All right, LEN, talk about a market that's part of a relative outperformer. We turned bullish on XHB and ITB back at the end of February. In fact, when I had to take a lot of medicine in tech, tech rolled over hard. You guys remember what February was like. Tech rolled over hard. I had to take some medicine. It wasn't fun, but this is what we do. It's why we have stops. And so what we did is rather than jumping right back into tech, which is, as I like to say, file that under reasons traders lose a lot, right? Losing traders do what? They lose in a market and they want to get right back into it. I had to take some medicine on tech. Tech rolled over. And what do? We looked for relative outperformers. And here it was. So talk about a relative outperformer, LEN, DHI, XHB, ITB. These are gorgeous, gorgeous trends. So again, be really cautious on talking about the markets, right? The markets are not weak. Tech is. There are a lot of really strong outperforming trends when we get beyond looking at what tech is doing. Facebook, Microsoft, Apple, Amazon, Tesla. I mean, really, who cares? Don't get hung up on that narrative. You're going to miss a lot of great opportunities. And Brett, your question is perfect because you're looking elsewhere. You're looking at, you're looking at where there's relative outperformance. I don't know that I love DLTR quite as much as your question about LEN. I would buy it, though. I wouldn't be short. But remember, it's not quite the same quality of trend. But we are above certain key levels. We're above the mean on the V-score. We're above the 200-period exponential moving average. We're above the VWAP anchored to the first of the year. We've got mostly green grab candles. The trend that preceded the current chop was double green. I mean, there's a lot to like to the long side here. Just not as gorgeous as that LEN. All right, thanks for the question. Nugget asks, NQ gap up or go down? And I mean this respectfully, NUGT, I don't care. I've got so little interest in the NQ. I don't want it to rob a second of my attention. I don't want it to take up any more time than, just sort of looking at it briefly to see maybe what the ES might be doing in response. The relative outperforming part of the NAS is the XLC, and that's what I'm going to continue to focus on. So I think right now, the less I get distracted by this market, the better. And your better proxy for tech right now is going to be pullback buys in the ES. Remember, the ES in the first 5 stocks are weighted, not weighted, the symbols are identical to the NASDAQ. So you've got your Microsoft, Apple, Amazon, Facebook, Google conversation, and then you've got your financials. So your better proxy for tech right now might be the S&P, or your more specific would be XLC. So if I'm looking at the S&P, XLC, what am I doing? Kind of going back to the question earlier, I'm looking at relative outperformance. So for the same reason, I'm really not that interested in NQ. I want to get a little bit more granular about it. For the same reason, I'm not really interested in say, IWM or Russell. I'll focus on the KRE. There's no edge here right now, right? There's so much that's double green and trending higher that it's so difficult not to want to spend time. Where my time and attention go, that's where my capital is going to go. So be careful looking at things that may not be giving you an edge right now, because it has a sneaky way of grabbing your attention and your capital. Okay. Every morning, it seems during charts and coffee, I feel like I'm going to sneeze. And I don't know if that's going to happen here or not. 2 days in a row. I don't know what it is. Okay. No, I think it's passed. Woo. And sneezing right into a mic is just bad. It's just bad play. All right. Woo. Sip of coffee, maybe? Okay. Moving on. How does the reflation environment change the forecast for XLV? It doesn't, my friend. It doesn't. I don't have. So reflation isn't a healthcare. Reflation is going to affect commodities. It's going to be more effective to focus on reflation long Dow, transports, industrials, ITB, XHB, XLB. No one's talking about XLB. This is something we've been talking about for a while in Sector Secrets, which is materials tend to do well in a reflationary environment. We're going to continue to focus on COMDOLs, right? EWC, EWA, FXC, FXA. So I'm going to continue to focus on those economies that are going to be disproportionately benefited from the increase in the inflation in commodities. So I wouldn't say it's really going to affect XLV as much. All right. Okay, next up is AMD. Sure. So AMD, same thing, right? Where is AMD heavily weighted? Is there anything else that looks better than AMD? Are there trends that are moving higher, whether that be SMH, etc.? But AMD, I'd have to say no. Not because there's not a setup for somebody. There might be something. There could be an oversold buy, be a slow stochastic, ready, aim, fire. I could revert to a V-score support level. But the truth of the matter is, again, if the overall markets are punching higher and I've got a stock that isn't, that's not something I want to spend a lot of time on. So I'll just move on. What are my thoughts on XLU? Chris, I am looking long XLU. It's got a gorgeous trend. It's heavily weighted in NEE, which is something I like to be long in between basically April and November. And it just pulled back. So XLU is a good looking trade in terms of the trend follow. And look, utilities are typically not where most traders will go when there's risk appetite. But look, I want to focus on where the double greens are. And even though it might be an unusual thing to say utilities are moving higher in this environment, they are. And they've got good structure. Heck, they've got better structure than the Qs, right? They've got better structure than the Qs. So I like the question. I like the symbol a lot. Thanks for asking. All right, next up is, hang on one sec, gang. I lost my place in the questions. So Nikolai asked about Apple and XLK. Nikolai, I chose my, what's the is it Mortal Kombat? Choose your fighter. I chose my fighter and I went with XLC. Now, do I think eventually Apple and Microsoft and XLK are going to move higher? Yeah, of course. I think they are eventually going to move higher. But here's what I would say. Focus on where the double green is. Focus on the relative outperformance. And you're not going to be paying attention to those markets that are not performing. Now, if you want a piece of Apple and you want a piece of Microsoft and you want to do it in a more affordable, low-cost way, go with XLK. But here's the thing. I don't want to short the NAS. I just don't feel it's where I'm going to see the best follow-through right now in a more predictable way. I hope that makes sense. I don't want you guys thinking, I'm not ignoring the Qs. There's just better places for me to deploy my capital. So when Janet Yellen sent the markets down on Wednesday, one of the things that we did is we bought XLC, we bought Bank of America. So those are things that I think are really, really important. Where is the best structure? Not where is the best bottom picking opportunity or what's cheap right now. Focus on what has flow, right? Is it allergies? I don't know, my friend. It very well might be. I've lived nearly half a century without them, but all of a sudden, especially in the morning, yeah, it's like, it is quite uncomfortable. But yeah, maybe it is. I'm developing allergies the latter half of my life. Go figure. So many areas are acting better. I agree. Yeah, Raymond, I completely agree. Is there a way to purchase the V-score indicator only? Yes. Andres, yes, you can purchase this indicator along with the anchored volume profile. It's a trio. I put a whole bunch of stuff in a package. It's 4 indicators you get. You can pick that up at the Simpler Trading Indicator store. Now, before you do that, I don't have all the details yet. I'll have to check with my right hand here in the office. But a lot of times when we have classes, certain indicators will be included with the class. I don't know with my upcoming day trading class in June whether that will be the case for this indicator or not. Let me find out. Ask me next week. And so, look, I'm just trying to get you guys a better deal. So I'll let you know if that's something we're going to do around the class. And if that's the case, ask me Monday or Tuesday, and I should have an answer for you. All right. But yes, we have a day trading class coming up in June. So looking forward to that. Futures, options, stock, how do you play this sort of index sector stock on a shorter term time frame? So thanks for the question. Have a great one, gang. Happy Friday again. It's non-farm payroll. Should be an interesting one. And also enjoy your weekend. Unplug for a bit. I'll see y'all on Monday. Be good to each other, gang.